Welcome to Module 1 of our Regulation CC training. Today, we're diving into the foundation of how funds move and when they must be made available under federal law. This module will walk you through the Expedited Funds Availability Act, the purpose and scope of Regulation CC, important definitions, and who must follow the regulation. First, let's go back to the reason Regulation CC even exists. The Expedited Funds Availability Act, or EFAA, passed by Congress in 1987. The EFAA was created to protect consumers by ensuring their deposited funds would be available within a reasonable time frame. Why was this necessary? Before the EFAA, banks would hold checks for extended periods without clear disclosure, leaving customers in the dark and delaying access to their own money. Why EFAA matters. The EFAA required the Federal Reserve Board to issue rules. That's where Regulation CC comes in and set maximum hold periods for deposited funds. It also mandated clear communication about when funds would be available and required standardized rules for check clearing and returns. In short, EFAA gives customers confidence that their deposits won't be held indefinitely and that the banks play fair when it comes to money access. Purpose and scope of Regulation CC. Regulation CC was developed to implement the EFAA. It serves four main purposes. The first is funds availability, setting timelines for when deposited funds must be made accessible to the account holder. The second is disclosures, ensuring institutions provide clear and accurate information about their funds availability policies. The third is check collection and return, standardizing how banks process and return check access across institutions. The fourth is expedited recredit, establishes a procedure for consumers to dispute and resolve issues involving substitute checks, a key part of Check 21 Act. Regulation CC sections. Each of these sections plays a critical role in how financial institutions operate and how we protect our members and customer rights. Now, let's go over some essential terms you'll need to understand Regulation CC. Definitions. Transaction account, a deposit account that allows the account holder to make withdrawals, deposits, or payments on demand, like a checking account. Business day, a calendar day when the bank is open for substantially all business functions. Saturdays and Sundays and federal holidays usually don't count. Banking day, a business day during which a bank is actually processing transactions. Substitute check, that's a paper reproduction of the front and back of an original check that is legally the same as the original for all purposes. Then you have availability schedule. That is a breakdown of when various types of deposits must be made available to the customer. Understanding these terms will help you interpret hold times, disclosures, and customer rights. Now it's time for a pop quiz. True or false? A business day and banking day are always the same thing. The answer is false. A business day is when the branch is open for business, but a banking day is when check processing operations are active. Knowing the difference matters. Who is covered by Regulation CC? Now, let's talk about who must follow Regulation CC. Regulation CC applies to all depository financial institutions in the United States. This includes national and state chartered banks, credit unions, savings associations, branches of foreign banks operating in the U.S. Regulation CC is enforced by the institution's primary regulator. For example, for credit unions, enforcement falls under the NCUA. For national banks, it's the Office of the Comptroller of the Currency, or OCC. For state banks, it's the FDIC or the Federal Reserve might step in. The Consumer Financial Protection Bureau, or CFPB, also has authority to supervise and take action against unfair and deceptive practices. Let's recap Module 1. The EFAA was passed to ensure fair access to deposited funds. Regulation CC implements this act by setting rules around funds availability, disclosures, check collection, and recredit. Understanding terms like transaction account and substitute check is critical to applying this law correctly. All depository institutions must comply, and enforcement depends on the institution type. In the next module, We'll dig into how hold types, including standard, exception, and case-by-case holds, and when they're allowed. Thanks for watching Module 1 of Regulation CC Training with Jay Get It. Stay tuned and stay compliant. Disclaimer: this training is for educational purposes only and is not legal or regulatory advice. Always consult your institution's compliance officer or legal counsel regarding the regulatory obligations.